Brilliant. Okay, thank you to everyone that's joined. Good morning. My name is Annabelle. I'm the Senior Entrepreneurship Officer here at GBS. I'm based in Birmingham, Norfolk House, room 108. And today we have a Think It workshop on everything business finance. And if I just share this slide, we have Ghutai Khuram speaking to us today in this workshop on business finance. So I will let Ghutai introduce herself, and then we can kick off this workshop. If I can just remind everyone to just stay on mute whilst Ghutai takes us through this workshop, and then we'll have some time for questions and answers at the end. But without further ado, Ghutai, it's over to you.
Hello, good morning, everyone. I hope you're all doing well. And I'm really sorry, for some reason I cannot turn on my video. So I'm sorry for that. And I'm going to share my screen. Can you see my screen?
Yes, but I think if you just click onto the actual PowerPoint, because I think you're sharing the Zoom as well. Or actually, wait, hold on.
Is it okay now?
Yeah, that's fine. That's fine. Thanks.
Brilliant. So today's workshop is about finance, and in this workshop we'll have an overview of the finance aspects of a business, including how to gather your startup cost, estimate your revenue, and calculate potential profit. So our today's learning objectives are understand the importance of importance of financial planning in a business, and learn how to gather and analyze startup costs effectively, gain insights into estimating revenue and forecasting financial projections, learn various methods to calculate potential profit and evaluate business viability, develop practical skills to make informed financial decisions for your business. So, for starting a business, the most important thing is planning to have a proper financial planning. The financial planning will help us through while we're starting our business and through different stages. First is like goal setting, resource allocation, budgeting, risk management, capital management, decision making, performance evaluation, and investor confidence and funding. So the very first goal setting is financial planning helps business set clear financial goals and objectives. So whatever our business is, small business, so it helps us to have a clear financial goals and objective for our businesses, and then it helps us to effectively allocate resources. Uh, and also helps us in budgeting for starting each. If we have a proper financial plan, it helps us to analyze and to have a proper budget for our business, um, like that outlines the expected revenues and expenses over a specific period of time, and also help us to manage risks. Whenever we are doing a business, there's always a chances of risk. So a proper financial planning helps us to avoid risk or even to minimize the risk. Each business has its own types of risk, and we cannot say like there's no risk in any business. But yeah, there are risks, but if we have a proper planning, we can avoid the risk or at least minimize the risk. And capital management. So financial planning involves managing the capital structure of a business. For instance, how much amount of money we are investing, the capital we have for a business, or the amount of money we need to borrow from a bank or from a friends or family members. And it also helps us in decision making for providing us crucial information for in decision making, like uh, it helps to evaluate the financial implication of various options which are available. So it helps us to make a good decision. And also, it helps us in performance evaluation, like establish benchmark and performance indicators to measure the success of a business. We can do this by comparing the financial results against the planned target, and the business can assess their performance and identify areas for improvement, and then take action as necessary. And investor confidence, it, and it demonstrates the business understanding of its financial positions, growth potential, and ability to generate returns. So, if we clearly identify these or plan this effectively, this actually boosts confidence of the investors and the people who wants to and invest in our business. So before we move forward, I'd like to ask you all a question. So for starting your business, how would you calculate your startup cost? Like, what are the components or what are the things are coming to your mind? Like, I would like to know, like, from your perspective, like, how would you start your business? I know this sounds a little bit academic and technical, but on day-to-day life, we all do like some sorts of budgeting or planning. For instance, for our household, we have a cash budget, or we can say like the capital, and then we analyze our cash inflows or the sources of our income, and accordingly then we set our budget and how like we are going to allocate that budget for our each activity, like for utilities, bills, rent, grocery shopping, and investments. So if you're planning to start your own business, so how would you calculate your startup cost? Can I have some uh, answers from the participants, please?
Please go ahead. No answer is the silly answer, so just have your best guess, and then I'm
All
sure
right.
Ghutai will answer.
So usually whenever we're starting for our business, the first thing which comes to your mind is obviously the budget and the cost, and the components such as like, okay, how I'm going to start my business, how I'm going to manage my resources, or what are the things actually I need to start my business. And so we actually make a draft plan, and initially we get from our idea, we inspired by an idea or a problem, and then we start to develop our plans for that. So for starting up a business, it's very important that to make sure that the business has enough money or budget to run smoothly the business. Usually, there are lots of businesses, they have good solutions to a problem, or they have good ideas and they have good market. But because of they didn't have enough budget or finance resources, in their startup phase, they run out of the business. So it's very important to plan our financing very carefully. So for doing this, usually there are three tools that people use. Like first one is startup cost, and then startup asset, then we have startup financing. So first one is startup cost. Startup costs are usually sometimes it's also referred as to like as a sunk cost as well, because these are the costs which are related to a business that we have to do it, either the business is successful or not, or whatever the reason is. So like for instance, accountant and legal fees. So for accountant, if you hire an accountant to make us a business plan for us, and legal fees, for instance, hiring a barrister, a solicitor to register the companies as a limited liability. And we also have business registration cost. If we do it online, I believe it's £14, but if we go via post to register our business, it's £40. And we also have some pre-launch costs as well. Sorry. For instance, like logo, market research. So these are our pre-launch cost and the amount of money we paying to hire the people before the start of the business. So this is our startup cost or the sunk cost. So we have to pay this cost to have all of these resources available in order to start our business. So then we're going to start up assets. So depending on the type of the business, you may need to buy different equipment, inventories, and cash and operating liquidity. So assets are different from the cost, and they appear different from expenses, and they appeared on the balance sheet. And although we pay cost to acquire the assets, but in future, if we sell them, they hold value, so the business can earn some sort of money. And as we mentioned, depending on the type of the business we have, we might need to buy different equipment such as plant, machinery, cameras, laptop, computers, printer, office furniture, and there are lots of other examples of equipments. And then we have inventories. So like we have stocks, raw materials such as for textiles, and cash and operating liquidity. So generally, any financial resources allocated to your startup, excluding loans or debt, are typically regarded as asset and must be included in the financial records. For instance, the capital we have for starting our business, cash, the amount of the money, our budget. So the next is starting up financing. So this process actually determines the expense associated with launching a new business and developing a financial projection that encompasses all the cost from pre-launch until the business become profitable. So usually, for instance, how much money your business needs till it reaches its break-even point. So the break-even point is the point where the expenses, the cost which we use to generate a profit is equals to profit. Means the company is not making loss anymore. So from the startup point, from the very beginning when we start a business, so we need to buy materials and we need to make lots of investment unless it reaches a part where the business starts earning more profit. But the start even point is where we don't generate more losses. So the profit, the amount of money which the business is making, it's equal to the amount of cost or expenses which we did to produce that product. So that's the point. And how we can calculate the startup cost. For calculating startup cost, we need to make a list of all of our startup assets and startup cost, fixed cost, and also variable cost. So I'm sure we went through startup assets and startup cost, and fixed cost and variable cost. Fixed cost is like, for instance, if we hire an office, so if we rent an office to where we run our business, so that's like a fixed cost. So on monthly basis, we pay the fixed amount of rent. And variable cost, these costs vary basis on our production. If we have more production, so we need to buy more materials, so that would cost more. If we have less production, so that's variable. It depends upon the production, how in the market, how we can produce, how much we can produce, and how the sales is going on. And the other most important thing is business forecast. So for business forecast, we should create a list of all the cost or sunk cost which a business have gone through, and year ahead projection of the activities. Like we can make like a spreadsheet. It's very good to keep a record of all everything, so we can make a list of all of our sunk cost, and then we can make a year ahead projection of our business activities, like in month one or in 3 months or in 12 months. We have a projection for our business, that how our business would look in the future. And then we also make a list of all of our variable costs. So we have a projection like, okay, so these are my variable costs. I might need, like, for instance, in first month, the I will produce, for instance, like 100 units, and in next month maybe I will produce like 1200 units. So maybe my cost is more increase or decrease according to, and then we can see how the market is going on and then how much we can produce. And finally, we can add sunk cost to all of the lists of to our list, and then we can see how much is actually the cost of the business that we are running. And last but not least is the break-even point. So it's very important. Then we also calculate our break-even point. So now we have mentioned like about to break-even point, and I've given a brief explanation in the previous slide. So now it's very good to like to know how we can actually calculate the break-even points. So for calculating our break-even point, so it's fixed cost divided by price minus variable cost is equal to number of break-even units. So I'm just sharing with you an example. So assume e-commerce business, Scrub and Lotion, has a project annual income of £4,000 for its sales of face scrubs. This is based on a forecasted sale volume of 2,000 units at £2 per unit. So the company's fixed expenses, such a rental of the business premises, have been estimated to be like, for example, like £9,000. And the company sells face scrub via its website online, which is considered its total revenue. Similarly, its total variable cost are estimated to be like thousands or 0.50 of variable cost per unit. In this scenario, you can calculate scrub and lotion's break-even point unit as so. We had this formula like for break-even points, fixed cost divided by price minus variable cost is equal to number of break-even units. So for doing this, we had a fixed cost, it's 9,000, price £2, variable cost 0.50. So for now, our break-even point is 6,000 units. So we need to produce 6,000 units unless the business another business reach its break-even points. In other words, this is point where this is point where revenues and costs will be equivalent, and an annual sales volume lower than 6,000 unit at £2 per unit means that Scrub and Lotion will be operating at a loss. Uh, So another very most important thing when we're in a startup phase or newly starting our business is it is very important to keep business records. And when we are saying keep business records, there are two things which are usually come to our mind: for what and why. So and what we should keep. It's good to keep a record of revenue generated by your business, expenditure incurred by your business, and accounts receivable, the amount of money owed to you. Like most of the times maybe we make sales and that's on credit, so that's account receivable for us. So we should have like a clear record of those accounts receivable. And accounts payable, money our business owed to others. Maybe we have purchased some materials on credit and we haven't paid them, so we need to pay that amount of money in future. So it's good to keep record of keep record of our accounts payable, accounts receivable, business expenditure, and revenues. And the other question is why? Funds necessary for current and future business operation. This will actually helps us like how much funds are necessary actually for current and future business operations, and analyze the profitability of our business. Either our business is making profit or loss, and evaluate both outstanding debts owed to others and debt owed to our business, sorry, and formulating financial strategies and uh, preparing financial cash flows. So there are actually three different types of we can say say, three types of business records. The first is supporting documents. We should start with our receipts. It's very important to keep all your businesses whenever you're doing the business. And then books record, such as cash books, debitor record, creditor record, and stock register. And then we have financial statements. In financial statement, we have cash flow statements, which shows how much amount of the money is coming into our business and the cash flow regression of our business. We have profit and loss statement, which identify the business is making profit or loss, and balance sheet, which shows the financial position of a business in a particular time. So, these are we can discuss these in more greater details. Like we have different types of cash flows. We have profit and loss statements and balance sheet, which usually describe a financial position of a business, and where we could have like assets, liabilities, and owner's equity and capital. So, whenever we're discussing about the business, it's usually whenever we start our business from the very beginning. So it usually go through different stages. So we usually have the launch stage, or sometimes it's also called as a born stage, where it means like we are launching our business, and it's in the very startup phase of the business, where we are investing more and we don't have much profit, or we are not making more sales. So it's just the launch of the phase. Usually we are more focused on the marketing and making awareness about our product, so that we to attract more customers and to uh, expand our business. And then there we have a growth stage. As you can see the line, it's in our it shows the growth of a business. In growth stage, like we have more income, we're generating profit, we are making more profit, and the business is running well. But then there is a shakeout phase. So the shakeout phase is there was usually most of the time the shakeout phase happens usually after the growth stage most of the time, where the business have make generated good profit and then revenues, and because of then they're once they're in growth stage, so they're facing more their competitors, and maybe and in this stage sometimes uh, the businesses either they are mm, in, they're not able like to go ahead, or sometimes they merge with other businesses. For example, the US automobile tire industry, which lost 95.3% of its firms before 1980s, experienced a shakeout beginning in 1921 till 1922, and the industry was ranked in the early 19s as having the fastest productivity increase of any U.S. industry. So after shakeout point, so then we have the maturity. As in conclusion, a shakeout describe a situation in which many investor exit their positions, often as a loss or a period of industry-wide consolidation. So after shakeout phase, we have the maturity stage, and sometimes like the businesses they declined, or if we merge the business with some other businesses, or we are able to attract more of investments or funds into our business, it goes to go back to like a life extension, and rather than declining the business, there's a process which is called life extension, and then we can have another growth to our business. So thanks for your attention. Any question?
Thank you very much, Ghutai. Um, That was really interesting and really important phase of any business plan. So I'm going to open up the floor to any questions. Please feel free to unmute and then just ask Ghutai your questions as well. Or I could start with a question because I know
Sure.
it's quite a complicated part of the business plan, but it's also very necessary. So in the startup phase, um, are there any other areas that should be considered when thinking about startup costs?
Yep. And the startup phase, other than thinking about the startup cost, so the things which we usually think about is the people, because usually whenever we start any sorts of business, so there's like it's man, money, and machinery. We can say like that. So analyzing the cost, so we should make sure for the success of any business to make sure that we have like the qualified personnel. So how many people we have for our business, so we can have that, and assets which are necessary for our business, market research, the most important thing to make our market research very clearly, and to set clear objectives for our business and business plan. So usually whenever we got, if we have a business plan, so in that we will have our objectives for our business, how we are running that business, and how that business is generating the profit in long term. And if we are like we're looking for external financing. External financing means if we're taking loans from the bank, or we're attracting more investors, or taking money from friends and family. So we should have like a cost of goods sold, like a per unit cost, and how the business is generating profit, and the break-even point. These are the critical things that we should keep into consideration. For instance, like if we are attracting external investors or external finance for our business, so and once we are able to clearly communicate that to them, so then it shows like the business is credible, and it it makes them like more confident to invest in the business, because we know we have a clear plan, we have a clear market research, and we know how the business is going to generate profit like in next from 5 to 10 years.
Brilliant, thank you. And in your opinion, how often should anyone starting a business like readdress this or like go back to looking at their startup costs, assets, and then thinking about profit? Is it once at the beginning, or is it once you've launched, then it kind of changes, or is it a continuous process that you have to go through?
Well, from my personal experience, I believe like it's very important to clearly identify at the very beginning and go through all the cost, and then throughout the process, but keep monitoring your cost. So it's very important to keep monitoring our business. So we can't say that once I have done it, so that's it. So we should keep monitoring our business, so in order to avoid the risks. So first, for instance, like there like to avoid the risks, and the risk could be anything. So if we keep monitoring our business plan, and we keep referring to that, going back again and again to that, that's actually very helpful. So I would suggest that regularly.
Perfect. And do you have any sort of resources that you use to look at your like a business budget and startup costs, or is it more an Excel spreadsheet that people can start just collating their information?
But that's a good question. Well, different people use different methods. I would not suggest like to if I suggest Excel or spreadsheet, but the important thing is here to keep a record of your costs, your business, the amount of money is coming into your business, going out, and I would say whatever is more convenient for you, like for them, like the way you're running your business. So whatever method is most convenient for you, I would suggest to use that. For instance, like there are some people who are very good in running business, but they might be not able to use the Excel sheet and maybe find it very complicated. But if they keep their records of the business like in a simple Word format, so that's still fine. It's important, like whatever is more convenient for you to use that method. But it's very important to keep record of your all activities, business activities.
Brilliant. Thank you. Are there any more questions from the audience
And
or anything else?
sorry,
Yeah,
I would like,
go ahead.
yeah, sorry, I would like to add one more point to this. So, for instance, if you're starting your business and if you go to like to any bank in the UK for to ask them to help you with your startup cost of your business and you're applying for a loan, so sometimes the bank they give you a very detailed like a spreadsheet where you can keep all of records of your costs and cash flows. So that could be like another thing, like so the bank they will give you. So that's another thing. So sometimes the banks they provide you with some spreadsheets so where you can keep the track of your records. But still, it's your, I would say, like it's always your responsibility to always make sure to keep records of your business, and whatever way of convenient is for you. There were a time when I was working with International Finance Corporation, and we were loaning money to micro businesses, the people who are newly starting their business. So we ask them, although we have our own spreadsheet, but we also like ask them whatever way is more convenient for you, do that. Most of the businessmen they come to recording, like keep very detailed record of each activity, which was very good for their business in the future. And for instance, they keep all of their receipts. They keep the track of all of their costs. So in future, for instance, something's happened, so you can clearly look back at the receipts, look back at your costs, the way you have recorded, because the way you record it, it's very important for you to understand that rather than for like some other person. It's for you to understand because you're the person who is running your business. So it's very good to record it the way you want. It would be easier for you to understand.
Brilliant. Yes, and it's one of those things that not everyone's going to have like the financial background, but it's important to understand what you need to record and why it's important. So I think this has been a really good workshop to kind of get people thinking about those sort of costs and the information that they need to keep on top of um, as they go and proceed to get finance from either family and friends or from the bank or elsewhere. So this has been great. I've just put in the chat the link to the feedback form and also where you can register for more workshops, as well as book a business call with myself in the future as well. If you'd want any more like help with this aspect or any aspect of starting a business, I know it can be a lot. So we are definitely here to help and support you through that journey. Um, but if there are no more questions, I'll just like to end it with, thank you to Ghutai for running us through that brilliant workshop. That was really informative. And just to note that this is recorded, so I will send the link once it's been uploaded to our YouTube channel so that you can watch it again and go through the details and start to put together your financial plan as well. So I hope everyone has enjoyed it and that you have a brilliant day. And we'll see you next week for next week's workshop, which is all about entrepreneurship skills and leadership skills. So stay tuned for that and have a great day. Thank you, everyone.
Thank you for having me. If you have any question, just you can say like you're free to drop me any message through Annabella. I'm happy even to have a one-to-one discussion with you, so feel free. Thank you.
Thank you.
Thank you very much.
Thanks. Bye.